Hi, it's Michael Farr at Farr, Miller & Washington. Thanks for joining me again this week for our video market commentary. I wrote this week about our value proposition to clients. We had a really interesting meeting here in DC of a bunch of money manager CEOs. We get together every year and talk about things that we're facing out in the marketplace. We talked a lot about cybersecurity. We talked a lot about elder abuse. Some really fascinating subjects that affect our clients, and we get together and do this, and every year, a couple of times a year, I leave these meetings with more good things to bring back to the firm and better ways to help our clients. One of the things we discussed was our value proposition, and while it's often hard to characterize, I talked about a client that we've had for many years through the late 90s, where we were putting the brakes on some of this institution's ideas that wanted to perhaps be more aggressive during the dot-com bubble. We went through the market decline following that dot-com bubble in 2000. We went through 9/11 and all of the pain and upset that caused and the grieving afterwards. We went through 2008 and 2009. We went through renovations for this foundation's building projects and when their funding needs were tight. And we went through the market lows of 2009, and then we were back off to the races as we have been lately. We've developed an institutional memory and a close working relationship both with management and the trustees. It's been a wonderful and fruitful relationship that we've enjoyed a great deal. It's hard sometimes to say that's what we do for individual clients as well. We have the privilege of setting up accounts when newborn children or grandchildren are born, and we talk through college planning and education and tax situations and retirement planning and income planning. And yes, we go through estates and sit and counsel with widows and widowers and are so privileged and honored to be included at these very special and important moments in our clients' lives. That's really what I think a good money manager does. I don't think it's something you get from an index fund, and I think it represents a tremendous value. We got the news from the Federal Reserve today. No surprise, they didn't do anything. And by not increasing and not even taking the first step towards removing accommodation from monetary policy, markets are up. Remember, we've said markets have been moving on every breath and utterance from the Fed for a long time. So the Dow Jones Industrial Average up over 100 points, 17,690, getting up to 17,700 again. The S&P 500 is up 8 points, 2074. Oil up $2.50 a barrel at 45.66. The 10-year Treasury yield is a little bit higher, right? The Fed might not be buying as frantically. 209, still very cheap, still very low. The euro, $1.09 buys a euro these days. That's pretty good for those who want to travel. Gold off. Not seeing much inflation. Gold down $10 an ounce at 1156. So, remember what I mentioned last week? The Fed in their September release suggested they don't expect to see their 2% inflation target hit until 2018. So we're not going to have, in the Fed's expectation, even 2% of price increases a year between now and 2018. That doesn't suggest a strong growth environment. The bias continues to be upward, but not robust. So to us, this is a time where strong balance sheets, good management, and earnings and increasing those earnings matter. If we can help you and help you with your financial life and navigate all that the markets and the economy and life has to throw at all of us, please give us a call at Farr, Miller & Washington. If you are a client of our firm, and I hope have been for a while, thank you very much. We appreciate your business, we appreciate your loyalty, and we appreciate your friendship as well. Until next week, in Washington, D.C., I'm Michael Farr.